how to react in unusual situations. Prices can be swing by dozens of percent within hours. Never invest more than you can afford to lose. How funding rates are calculated. What makes crypto futures dangerous? How to avoid fatal mistake. Well, cryptocurrency futures are becoming increasingly popular among traders, and it's not a surprise. They offer great potential for profit, but behind their high rewards lie huge risks. How do you avoid falling victim to your own greed and avoid fatal mistakes in trading crypto futures? Let's take a look at the main dangers and ways to protect yourself. Hey, welcome to the Russian Traders channel. My name is Vladimir. Get yourself comfortable and let's get started. If you want to dive deeper into the world of financial markets and learn about proven strategies, subscribe to our channel. The link is in the description below. Okay, let's start. Volatility. Cryptocurrency markets are known for their high volatility. Prices can be swing by dozens of percent within hours. This creates huge opportunities but also risks. One wrong move and you could lose your entire investment overnight. To protect yourself, always set stop losses and never invest more than you can afford to lose. Funding rates. Futures require traders to pay funding rates, which can significantly affect profits. Well, these rates depend on the difference between futures prices and spot prices. Well, during periods of high volatility, they can make trading unprofitable. Make sure you understand how funding rates are calculated and factor them into your decisions. Correction robots. Many traders using algorithmic trading to profit from future deals. Correlation robots aim to profit from correlated assets, but their work depends on algorithm rules. If the market behaves unexpectedly, this can lead to significant losses. It's recommended to manually monitor the work of robots and know how to react in unusual situations. Dependency on news and stock markets. Cryptocurrencies do not exist in a vacuum. News about regulation, technological changes, or major deals can drastically change the price movements. Additionally, crypto markets often correlate with stock markets. This means a stock market drop can lead to a drop in cryptocurrencies. Always keep an eye on the news and analyze how it might impact your investments. Don't forget to subscribe to our channel to stay updated on the most relevant financial market content and top risk management strategies. Alright, crypto futures certainly offer unique opportunities to earn, but they come with equally significant risks. Always consider volatility, funding rates, robot performance, and the impact of news on the market. Study and apply risk management strategies to minimize potential losses. The ability to adapt and learn from your mistakes will help you avoid fatal traps in this exciting but dangerous world. This was Russian Trader. Thank you for watching. See you in the next video.
Russian trader, feel his Russian style.